November 11, 2022. A one-line filing hits a Delaware bankruptcy court. $8 billion in customer funds. Gone. Days earlier, this company was worth $32 billion. Regulators had praised it. Politicians had taken its money. Now its founder is sending apology tweets from an undisclosed location. What happened in between is one of the strangest financial collapses in history. Sam Bankman-Fried grew up in California, the son of two Stanford law professors. He studied physics at MIT. Then he did something nobody expected. He walked away from a top Wall Street trading job to build a cryptocurrency exchange. By early 2022, that exchange, FTX, was valued at $32 billion. Investors called him the next Warren Buffett. And he'd signed the giving pledge, promised to give away 99% of everything he earned. Crypto's selfless genius. A man who claimed he was only in it to save the world. Here's the image he sold the world. Messy hair, cargo shorts, a beat-up Corolla. He slept on a beanbag in his office. During investor calls worth hundreds of millions of dollars, he was reportedly playing League of Legends. Every detail sold the same story. This is a genius too busy saving the world to care about money. That image was worth billions in trust. FTX ran a Super Bowl commercial with Larry David. Tom Brady and Gisele Bündchen became brand ambassadors. Bankman-Fried testified before Congress. He met with regulators in Washington, proposing new crypto rules, himself. The media called him crypto's adult in the room, the one exchange founder who actually wanted oversight. But something didn't add up. And in November 2022, a leaked document would start to unravel it. On November 2nd, 2022, the crypto outlet CoinDesk published a leaked balance sheet. It belonged to Alameda Research, Bankman-Fried's separate trading firm. The balance sheet showed something strange. Alameda's biggest asset wasn't cash, wasn't Bitcoin. It was FTT, a token that FTX itself had created. Billions of dollars in value. Backed almost entirely by a coin FTX invented out of thin air. Nobody understood yet what that actually meant. But one person did. Changpeng Zhao, CEO of Binance, read the report. Binance had once been FTX's early backer. Now it was its biggest rival. On November 6th, he tweeted that Binance would sell its entire FTT holdings. One tweet. Within 72 hours, customers tried to pull $6 billion out of FTX. FTX did not have $6 billion. On November 8th, Binance signed a deal to bail out FTX. For 24 hours, it looked like the story might end quietly. Then Binance looked at FTX's actual books. On November 9th, they walked away. The deal was dead in less than a day. 2 days later, on November 11th, 2022, FTX filed for Chapter 11 bankruptcy. 1 million creditors. $8 billion missing. Here's what that filing actually revealed. FTX was never really a functioning exchange holding customer money safely. Customer deposits, money people thought was sitting in their accounts, had been quietly funneled into Alameda Research, Bankman-Fried's own trading firm, used to make risky bets, used to buy real estate, used to prop up FTT's price. The $32 billion valuation was never built on real assets. It was built on customer deposits, circulating in a closed loop, disguised as capital. FTX didn't collapse because of a bank run. The bank run just exposed what was already true. There was nothing left to run on. In December 2022, Bankman-Fried was arrested in the Bahamas, extradited to the United States. His inner circle began cooperating almost immediately. Caroline Ellison, Alameda's CEO, and Bankman-Fried's former girlfriend, testified against him in court. She told the jury exactly how customer funds moved to Alameda, and who told her to move them. In November 2023, a jury convicted Bankman-Fried on 7 counts of fraud and conspiracy. In March 2024, he was sentenced to 25 years in federal prison. Behind the headlines were ordinary people. Retail traders who had parked their savings on FTX because it felt safe. Regulated. endorsed by celebrities, backed by a genius in cargo shorts. Many are still waiting years later to see if they'll ever get their money back. If you want more deep dives into the biggest financial collapses in history, subscribe to the channel. Because here's the real question this leaves behind. How many other companies right now are calling customer deposits assets and just haven't been caught yet?